Good day, you are welcome to my channel. This is Kevin Davis Accounting. So we are still continuing with our topic on partnership accounts, and before we continue, I would like to urge you to subscribe to my channel. Please subscribe, share to your friends, let them also have a benefit. Tell them there's free learning taking place at Kevin Davis Accounting. Together we grow, and together we shall be successful together. So let us continue with our topic on partnership accounts, but basically today I would like us to look at accounting for goodwill. So the big question is, what is goodwill? Because previously in my video I told you that goodwill is an asset. Of course, it's an intangible asset. It has no physical existence because you cannot see it. So goodwill is an intangible asset arising from the business's operation and makes the business have to earn more profits than other businesses in the same field. For example, if it is an institution, this institution will earn more profits than other institutions in that same field. So now, why do people all opt for that institution? So there could be very many reasons as to why people are opting for that institution. One of them could be the good name that institution has in the society. Two, it should be the academic excellence of that institution, and very many other factors that lead to the rise of goodwill. So today I would like us to look at the valuation of goodwill. But before I go to that, let me tell you about the types of goodwill. So when it comes to the types of goodwill, one, we shall have what they call the inherent goodwill, and then we shall also have what they call the purchased goodwill. Now, when we talk about the inherent goodwill, this is the goodwill which is internally valued. So meaning the people under the business will sit down and say, okay, based on how we have been functioning or operating our business, this is what we expect our goodwill to be. So this is internally valued. Then this one, when we talk about the purchased goodwill, the purchased goodwill is the excess of the purchase consideration. Of course, a business being sold as a going concern, meaning that of course it's not going to be extinct in the next 12 months. So when the business is being sold as a going concern, when you look at the purchase consideration over the fair value of that business, so meaning, for example, let me say a purchase consideration is worth, let me say, 500 millions. You see, when you're going to buy a certain business, they will tell you that the business is actually worth 500 millions. But when you calculate the net assets, because when we are buying a certain business, we are buying the net assets of the business. So when you calculate the net assets of the business, they are worth 400 millions. So meaning the extra 100 millions will give birth to what we call goodwill. So basically, this is how purchased goodwill looks like. So it's the excess, of course, of purchase consideration over the fair value of the assets of the business. Now, the big question still comes up in the house: what do we call fair value? When I speak about fair value, because I know it's something that will be tested somewhere. So what is fair value? So when we talk about fair value is basically the value at which an asset can be exchanged or a liability is settled between knowledgeable and willing parties at an arm's length transaction. So basically we are looking at the exchange of an asset or a liability being settled between knowledgeable and willing parties, because that's very important. The parties have to be, one, knowledgeable, two, they have to be willing, there must be no coercion, and then we call that an arm's length transaction. So basically that's what we call fair value. Then allow me to talk about the valuation of goodwill about valuation of goodwill, and basically this is where our question is going to come from. Most of you are doing papers, CPA. This is where they are testing. Most of the testing has to come from this place. Now, when we talk about valuation of goodwill, we have close to 3 methods of valuation for goodwill. One of which is the revaluation method. So what is the revaluation method? The revaluation method, this is the method where goodwill is recognized in the books and is maintained in the books of the partners. So meaning, after us recognizing goodwill, you're not going to end there. It has to continue. That means when someone checks the statement of financial position of these partners, actually has to find goodwill. So here, goodwill is actually maintained. Goodwill maintained, recognized and maintained. Then the other method I would like to talk about is the opposite of this. It's called the memorandum revaluation method. So basically here we recognize goodwill but we do not maintain it in the books. Now when it comes to this, for example, revaluation method here, what we are going to do, the double entry system here says, of course, one, we shall debit the goodwill account. Remember, goodwill being an asset, remember I told that all assets have a normal debit balance. So if all assets have a normal debit balance, meaning goodwill also will come under debit. We shall debit our goodwill account. Then we shall credit the capital account of the partners. Remember I told you in my earlier videos, I told that the capital side or the capital increases on the credit side. So meaning when we credit the capital accounts of these partners have to share this. That means it's going to increase their share. So here we are going to use, of course, the old profit sharing ratio. This is what we are going to do for this. This is very, very easy. Now let me put my focus on the memorandum revaluation method. So when we talk about the memorandum revaluation method, so our memorandum revaluation method. So remember I told you when it comes to the memorandum revaluation method here, what we are going to do, of course, we are going to debit goodwill, but now, of course, goodwill is going to be recognized, but it's not going to be maintained in our books. So meaning, this is what we are going to do. The double entry will be, you debit goodwill account. So you know very well that if it is an asset, it always has a normal debit balance. So goodwill being an intangible asset, it has a normal debit balance. That's why we are debiting it. Then we are going to credit the capital accounts of our partners, but using the old profit and loss sharing ratio. I hope you can see this. So that means if the old profit and loss sharing ratio was 4:2, that means it's the one you're going to use here when you are crediting in the capital accounts. Now, when we are writing it off, we are going to come back and we reverse this transaction. So now, in the reverse of this transaction, what we are going to do, we are going to debit the capital account of these partners, and then we shall credit the goodwill account. Meaning, we shall not have any other value of goodwill appearing in any books of these partners. So this is what we are going to do. We are going to debit the capital accounts of these partners, but this time, when we are debiting the capital accounts, we are going to use the new profit and loss sharing ratio. So that means that if these partners, they changed, if it was 4, let me say if the old was 4:2, and now let me say it is 3:3. So meaning the old profit and loss sharing ratio was 4:2. Then the new one is 3:3. So when it comes to debiting the capital accounts, actually we are going to use this new ratio. It's the one which we are going to use. So basically that's how we are going to do about this. So then after debiting the capital accounts, we are going to credit the goodwill account. So of course, when it comes to this, when we credit the goodwill account, of course, we shall still use, of course, the profit and sharing ratio, of course, which is new. So basically, that's what we are going to do. Then the other method, of course, is the premium method. And then this method still, of course, goes hand in hand with these two methods. But though this one includes so much the admission of a partner, the admission of a new partner to the partnership. So basically, that's what we are supposed to look at. And we are going to solve a number involving the two scenarios. And at the end of the day, I believe our understanding will be enhanced. Thank you so much for watching. This is Kevin Davis Accounting. Please share to your friends, subscribe, and watch out for my next video when I'm solving a question on this.